Joining me now is Brian Penny. He is the CEO of Wallbridge Mining. Good to see you, sir.
Nice to meet you.
So let's get a broad strokes overview of the company and the assets. You've got the Fenelon project, and you've got a PEA on that, and then the Martiniere project as well. You've done a couple of phases of drilling this year. Can you give us a snapshot?
I can give you a snapshot. We have two projects that are about 30 kilometers apart. They're in the northern Abitibi. Fenelon is more advanced because we've been working it longer than Martiniere. We acquired Martiniere when we acquired Balmoral about 3 years after we started exploring at Fenelon. Fenelon has most of the drilling to date. We completed a PEA. Our focus on the PEA was looking at risks going forward. In 2023, there was a PEA done on a 7,000 ton a day mine. We simplified it to 3,000 tons a day. We did a grade tonnage curve and it landed around 3,000. So that's what we built into it. We focus on dry stack tailings, because we are in the Hudson's Bay lowlands and there's some, unconsolidated fill throughout the property, learning from past experiences of others. And, really exciting news on Fenelon. We said we were going to announce that on the end of March. It was published March 27th, filed a technical report the same day. Now we're working on what do we need to go to a pre-feasibility study. It's going to take a little bit of time because we raised $15 million the other day on a flow-through and hard dollar financing. And that, with the proceeds from the sale of Detour Leak to Agnico and our refundable tax credits we got from the Quebec government, will fund a program for next year, but not enough to take us to complete a pre-feasibility in any reasonable time frame.
Right, and we'll circle back to the financing in just a second.
Yeah.
The Fenelon project, you said you designed it to have it be lower cost, higher grade, lower capex. So can you flesh out some of the economics, which you think are pretty robust?
Yeah, well, when we announced this, long-term consensus prices was $2,200 gold. Gold was trading a little bit above $3,000 an ounce when we went hard on the price assumption in February. Okay, at $2,200 gold, initial capital is $579 million. Our NPV5 is $706 million, 21% IRR and a payback of 4 years. We thought we were being aggressive, sensitizing it to $3,000 an ounce, which today seems a bit conservative. But initial capital doesn't change. NPV goes up to $1.4 billion. IRR increases to 34%, and most importantly, the payback is 2.4 years. Myself being a financial professional, that's what excites me.
Yeah.
And if you look at if you were to run those numbers at today's prices, they would only improve.
Mm-hmm.
But
now, you're old enough to remember when gold was at $250 an ounce, and you said you remember that like it was yesterday. And you've also said that because gold is around 4,000 now, you really want to fast track this and get it, have an efficient path to production. So how do you go about doing that?
Well, what we're going to do with the money we raised is we're going to continue to explore Martiniere because we had some excellent results there. We're going to do some work on Fenelon on some of the studies. We're going to do some larger core met drilling for two purposes. One, to give us another met sample on Martiniere, which is needed for a pre-feas, as well as some geochem analysis with the dry stack tailings to give us some understanding that this material will dry stack efficiently. And then we'll do some exploration drilling on Fenelon, as I mentioned on Martiniere, and there we have 598 square kilometers of land, so there's some other targets we want to investigate as well. And then with the right results, we're looking forward to starting a pre-feasibility sometime in 2027.
Okay, very good. Now back to the financing. You said the company raised $15 million. You got a $5 million tax credit from the Quebec government. You're funded through 26. So is it too early to have a timeline to project financing, or that just all depends on how it all comes together?
It all depends on how it all comes together. In order to start a project financing, you need at least a completed pre-feas, and ultimately it's all contingent on a bankable feasibility study. So, that is a few years off into the future. Mm-hmm. When I was the CFO of Western Goldfields, we took the old Mesquite mine, brought it back into commercial production, and we went right to a feasibility study, but it was an existing past producer, so it was a little less stressful.
Okay, now lastly, Brian, when I was working on this research on the company, stock was up about 70% in the last 6 months or so. So not bad, but like most CEOs, you think your stock is undervalued. So what are the keys to get the valuation higher and to get the markets to better understand the story?
We need to obviously market more. That's key. We are attending the Swiss Mining Institute and the one-to-one conference in London later this month. We need to focus on our deliverables. We have a board meeting in December to approve our business plan, which we will announce, and we will have all of our deliverables for the year outlined there. We need to hit those bogeys and continue to deliver and de-risk, de-risk, de-risk. We don't have a lot of money, but target where we can de-risk to clarify a better path going forward.
Thanks for shedding some light on Wallbridge Mining, and we'll be watching. Thanks.
Thank you very much. All the best.
Thank you, Brian. Brian Penny, the CEO of Wallbridge Mining.